Okay, good morning. It's episode 9 of Talking Ball with Signal Centre. I'm Joe Neighbour, joined as always by Steve O'Hare and Ian
Morning.
Coleman.
Good morning.
How are we, guys?
Very
good,
well,
thanks.
you?
Yes, all good, thank you.
Good.
Well,
Oh, is that the crystal ball? Is that the whoever's behind you? Oh, it's Ian, the crystal
Ian,
ball.
the guru, Ian, with his 8 out of 8 trades called live on the podcast, which I think is pretty darn impressive.
Yeah.
Just have a quick recap of that. So 8 trades in. I still haven't adjusted the league table, Steve, so you're still sitting in last, although technically you're second.
Yeah.
Ian, 8 trades, 229 pips, 6.23 R with 100% win rate.
Show us the table.
So let's have a look. There we go.
Nice. Well done, Nate.
Lovely, thank you.
A very nice upward trajectory on that line. We're crisscrossing around, Steve, but you are ahead of me at the moment there with 2.3 R versus my 0.69 R.
All positive though.
Yeah, so as a team, we're all about the team. The £1,000 account, which risks 1% per trade, so a maximum of 3% loss on a daily basis, is up 9.48% since we began this little challenge eight trading sessions ago.
God, that's better than the FTSE. If you'd have invested in the FTSE at the start of the year,
yeah,
that definitely hasn't returned close to that.
That's massive outperformance. So,
what is the benchmark? Is the benchmark the FTSE, or we have to get something a little bit more realistic?
I'll work on a benchmark for us.
Yeah.
Cool.
I mean, it's good to see that we're sort of like we're only 38% win rate. Ian's obviously 100%, but we're 38%, and you're close to flat, and slightly positive. So it's
just about risk management and good risk reward on your trades.
Exactly.
So, Ian, it's your honour. What have you got for us today?
Lovely. I'm going to stick with Bill and Ben, dollar yen. I just quickly want to talk about the dollar index again, and why I'm sticking with dollar yen and not one of the FX majors, because we have this level 98.37. It looks like round about half the net losses from October, so a Marabuzzo level, and you can also note across here that it was previous resistance, so it's likely to be previous resistance again. And I've got quite a big level in euro dollar at 110.26, and it's just hanging in there. So I want to move away from those guys or the FX majors, and I want to look at dollar yen and the wedge formation. So 61.8% fib. We had a bit of a sell-off on Friday, but it was an inside day. But we've had that push through again overnight with continued worries about the China Trump trade deal and rioting in Hong Kong. They've actually started using live bullets out there now, and somebody got shot overnight, which is nice.
So the formation on that chart as well, that's like an evening star formation on that last chart, on the daily chart.
On the daily?
Yeah.
Even with a low close today, especially if you get below there. I mean, this is quite a pivotal level. But if you go to a shorter time frame, and this is just a 60 minutes, I think that's quite an aggressive sell-off. I think this is just a pause at that 61.8%. And I'm looking at it to push through, not just short term, but long term. I mean, we might get down towards this fib and then bounce back maybe for head and shoulders. So left shoulder, head, bounce back to right shoulder, and then sell off. But immediate bias is still to the downside. So I'm looking to sell dollar yen, 108.97, 20 tick stop, 108.58 target. So just a little 2-to-1 today.
Nice.
Good stuff. What you got, Steve?
And on that dollar chart, I think that was on the monthly chart on the dollar index, that was a bearish outside candle on the monthly chart as well, isn't it?
So it was,
pretty bearish. Let me just bring up my chart. Here we go. Can you see my chart?
We can.
I'll get rid of all my my other tabs in the background just in case you see the ones I'm really looking at.
So has that come back in your favour in the last couple of minutes?
No, yes, it sort of it has. I was going to sort of like switch oil, obviously, because it was offside for a few minutes. So I'm sticking with it. There's a big discovery of oil. I looked a bit more into it. It came up on our Telegram chat, which was quite nice, and the interaction that we're getting there. They discovered a new oil field containing 53 billion barrels. Apparently, it's been revised to 22 billion barrels this morning by Rouhani. And only a tenth of it is actually extractable due to technological limitations. But yeah, I think obviously the main cause for concern for Iran, as far as I can see, is the American interest now in even more interest. If there's more oil there, they're more interested in maybe invading and taking it. I just continue to see these rallies being sold into on the shorter term time frame. And from an intraday perspective, I keep looking to sell into rallies. It's just getting the timing right. So for the gun to head challenge, I'm just going to get short at 56.68, the level that I mentioned a few minutes ago. The stop on that trade is 57.48, and the target is 54.88. A move down here. I think if you get a break below here, you're getting a double top formation. And here it's again, there'll be support down at this 55.81 level. A break of that should see the move accelerate quite quickly towards the bottom of the channel trend line.
Lovely. Like it.
Share.
Okay, so my trade is the FTSE 100 today. I've got a bullish channel here on the 60-minute chart. So we've also got a 61
4-hour chart, that is it?
Sorry, 4-hour chart, sorry. And we've got 61.8% Fibonacci level from this swing move here, which both marry up about the same sort of level. So I'm looking to buy that today. We've got some UK data due out at 9:30. Looking at cable when it comes to the FTSE 100, that can be quite pivotal and influential. Basically, the FTSE 100 is made up of a lot of multinational companies. So there's a lot of companies like the oil companies or the big pharma stocks that actually make most of their revenue in dollars. So if cable is lower, so sterling lower and dollar higher, that is typically good for these companies. And then you see them rally, and they have such a big weighting on the index that they can actually drag the whole thing higher. So I'm looking at that. I think I want to buy it here at 73.16. I want to target this swing high up here at 74.35 and place a stop below that bar there, which is at 72.75.
Lovely.
That's my trade for today.
Lovely. Good luck with that.
So we've got some data from the UK due out at 9:30. Anything else we should be looking out for, Ian?
Not really. I saw something overnight that I thought was quite interesting, which was the Chinese retailer Alibaba. They have this sort of crash sale, a bit like Black Friday, but over in China it's called Singles Days, and it's because it's the 11th of the 11th, and it was just a gimmick, and they're supposed to represent single people. And in the first 9 hours of sales of the Blitz, they call it, they turned over $23 billion, and that's nearly 2/3 of Amazon's complete sales on online sales for the whole of the last quarter.
Wow.
So it just makes you think how aggressive online sales are going to be this year.
Yeah.
Especially on Black Friday. But like you say, apart from that, we've got numerous UK figures due at 9:30, with the main one being gross domestic product, GDP, expected at +0.3. And then tomorrow we've got UK unemployment, so it's pretty UK focused, I think, at the beginning of the week. We've got the ZEW survey, which is economic sentiment out of the Eurozone, and that's due at 10 o'clock tomorrow. And then overnight, Tuesday night, Wednesday morning, we've got the New Zealand interest rate decision. So I think they're basically the three things that are going to be in the focus.
Cool.
The focus this week, beginning of this week anyway.
Great. Okay, gents, well, let's wrap that up for today then. Let's come back tomorrow, have a look and see how our trades have done, and speak to you all in the morning.
Cheers, guys.
Enjoy.
Cheers, guys.
Good luck.
Bye.